Hello, hello, hello. Good afternoon and welcome to Tax Tip Tuesday. I am Chastity Grady. I am your host. I am the owner of Grady Tax Plus, where I help service-based providers who are doing their business understand their business structure, understand their tax situation, and help keep their finances organized so they can feel confident knowing that you are saving both time and money. So I talk a lot about businesses in regards to business finances, business taxes, business structure. But one thing that you can't neglect or you can't overlook when it comes to taxes is your own personal tax situation, okay? You always have to keep your personal tax situation in mind, specifically because depending on your business structure, you may not even be able to file your business return without your personal. So like if you have a Schedule C. And then always, you always have to file a personal tax return, especially if you meet the requirements to file a return. And so when it comes to your personal tax situation, I wanted to talk about marriages, okay? Whether you're getting married, you are married, you're newly married, or a demise of a marriage. Regardless to wherever you fall, you have to consider your tax situation, okay? Because depending on how you decide to file your tax return with your spouse or without your spouse, that could affect you. Either it could affect you in a good way, but it can also maybe affect the other party, your partner or whoever, in a negative way, or vice versa. So you want to make sure that you understand what it really means to file, either file jointly or file separately, okay? And so that's what I want to discuss today. I want to talk about three must-dos, three things that you must do, or three things that you must consider as a married person, as a person who is maybe getting married, thinking about getting married, or someone who is ending a marriage. Three things you want to consider when it comes to your personal tax return, okay? And so if you like what I'm saying so far, definitely go ahead and share this video out with someone who needs to hear about this, who needs to understand what it means to file, married, what it really means. And so one of the things I want to talk about today, the first point let me just say this, anything that I discuss in this video is for general guidance. And if you need specific support for your specific situation, then definitely schedule a consult. And I do have my link there, so you can schedule one if you need to. And so what I want to say first, there's rules, there's always exceptions to rules, and I'll talk about a few exceptions at the end. But let me talk about one of the first things you want to consider when it comes to getting married, being newly married, or like I said, the demise of a marriage. You want to make sure that you choose the right filing status for you. So when you're married, you have married filing jointly and married filing separate, right? And so with those things, a lot of people, they think, I'm just going to file separate. I don't want, my financial dealings, mixed with my spouse and vice versa. And you think that, using that filing status is going to alleviate you of anything that has to do with the other party, and that's not necessarily true. One of the things, what happens is when you file married filing separate, you do have to include your spouse's social security number on your tax return. So you have to consider that on your tax return. And so whenever you do that, and so y'all, one second, I got an interruption coming in. But yeah, so you want to consider that. And so a lot of people, depending on where you are in your marriage, you may decide that you're not talking with the person that you're with. And so you may not have access to that social security number, or maybe you don't want to include that social security number. But that is something that you have to put on the tax return, because one of the things the IRS is going to do, they're going to cross-check that return to make sure that what one person is doing on the return matches what another person is doing on another return, which brings me to my next point. Number 2 is the deductions, itemized versus the standard deductions, okay? When it comes to filing separately with your spouse, if you decide to itemize, which means if you have a house, if you're claiming a lot of charity deductions, medical expenses that qualify you to have a higher deduction from the standard deduction, what happens is you automatically put your spouse in the category of having to itemize their deductions as well. And if they don't do that, Or if you don't do that and your spouse itemized, then you are putting yourself at risk for an audit, because as I mentioned, you do have to put your social security number they have to put your social security number on their tax return, and you have to put their social security number on your tax return. So if one spouse itemizes, the other spouse has to itemize, okay? And guess what that means for the person who was not expected to itemize? You may be at, you may have a higher tax liability, because then your deduction starts at 0. So versus with the standard deduction. So with the standard deduction, you have almost $13,000 deduction, just like a single person would. But like I said, you have to kind of coordinate with your spouse to decide, hey, are we going to both do the standard deduction? Those are things you have to talk about. If y'all are both going to do the standard deduction, then everything is cool. But if someone has, the house in their name or anything like that, and they want to be able to claim that house and any other like medical expenses or a charity that gives them a higher deduction, then that will put the other person on a lower end with their deductions, because then they won't have a house to claim. And then if you didn't contribute a significant amount for a charity, then you're going to be on the downside. You're going to have a high tax liability. Your deduction is going to start at 0, and you have to work your way up from that. Okay, so that's one thing that's like the main thing that people overlook, and that is one thing that you definitely want to consider when it comes to filing separately. Okay, that can really hurt you. Another point I want to make, the third point, in regards to filing separately, okay, a lot of people think that, oh, when you file separately, I put all my income on my return, they put all their income on their return, and we're good. And hypothetically speaking, that is true, but not true for all states, okay? So if you live in a community property state, like Texas, Florida, and there's like about 7 to 9 community property states. What that means is that everything that the spouse have, you are entitled to have, okay? You're entitled to have, and they're entitled to half of yours. Which means that when it comes to the tax return, you can't just claim your income that you made and they claim the income that they made. That's what people in traditional states would do. But if you're in a community property states, it's a little difficult. So let me give you an example. Let's say, spouse A makes $50,000 a year, and then spouse B makes $150,000 a year. And generally in a non-community property state, you would file, the spouse A would put $50,000 on their return, spouse B would put $150,000 on their return, and then they're good. Unless they're itemizing, then they have to do that. But in a community property state, for example, like Texas, the person who made $50,000 is entitled to half of the $150,000. Okay, all right, you're entitled to half, which means the total income is $200,000. Okay, and so instead of the $50,000 person claiming $50,000, now they have to claim $100,000 on their tax return. And then the other person, they get to now claim $100,000 on their tax return, which benefits them because it lowered their tax liability by $50,000. But now spouse A, their tax liability has been increased by $50,000. Okay, and you have to allocate not only your like income you make, but any other types of income that comes in, like retirement and other sources of income. All of that has to be allocated 50-50 down the middle, okay? 50-50 down the middle. And a lot of people, they miss that and they don't get it and they don't do it, especially when they're filing their own tax returns. Although I have come across some new tax clients who previous people filed and it wasn't done right. But the issue is that when you file separately and you're in community property states, you do have to allocate your income. You can't just claim yours. You have to claim 50%, okay? So which may increase your tax liability, or if you're on the higher end, it could decrease your tax liability, which may be a benefit for you, okay? So that's why I say you have to kind of weigh the pros and cons when it comes to married filing separate. You do have to have a conversation with your spouse about that, because one person could benefit from it and another person could be severely affected, have a high tax liability, and it not go well for them at all. So that's why, before you get married, in the process of getting married, anytime during the marriage, if something may change, you have to talk about your tax situation, because how you're going to file is going to affect what the outcome is, okay? Especially when it comes to the divorce, okay? When it comes to the divorce, you still, and a lot of people think, and if you were to file jointly, a lot of people have their preference with, being joint for whatever reason that you may have. And if you're concerned about, a spouse's, tax liability or things that they may owe, you can, file a form to end your spouse, or if you're concerned about any tax evasion or anything like that, you can do an innocent spouse to help, cover your bases. But generally speaking, with the married filing separately, you do have to still consider your spouse, which is unfortunate. When you think about something, for some people, if you're together and filing separate, then, it's kind of easier to have that conversation. But if you're not talking with that person at all, it's tumultuous or anything, something like that, then you may not be able to know if they're, doing their standard deduction. You may not know, what's going on their side. And like I said, there are exceptions to the rules. There is a form that you can file. For example, if you're unable to allocate appropriately, there's a form, there's exceptions to the rule, but you do have to, know what they are and file the appropriate forms with your tax return in order to cover yourself. But I wanted to discuss this so you have a general basis and understanding that, in a marriage, obviously they say finances is the number one killer to a marriage, but you also, but part of finances is taxes. And so always consider the tax situation when it comes to your marriage, especially if you're newly married, about to get married, and also, on the demise, if you're in a situation where, your marriage is ending, you still, that, you may have to file a return together or separately, whatever. And there are, like I said, other exceptions to the rules, depending on your, whether y'all live together or not, if y'all are legally separated. Some states recognize separation, other states don't. So if your state doesn't recognize legal separation, like Texas, for example, then you won't be able to use one of the exceptions of filing single. So you have to kind of, like I said, know your tax, know your situation, know what's going on. And also consult with a tax professional who actually knows this stuff, knows about the different parameters around filing separately. And we have 2 months left in this year, less than now. And if you're in a situation where you might be filing separately, you're in a community property state, or you may or may not know about itemizing your deductions, then schedule a consultation to see what can be worked out before this year is up. Because once this year is up, there's not a whole lot that can be done when it comes to your tax situation for next year, for the filing time for this tax year. So definitely schedule a consult with me. My link is linked there. I'll link it in the comments below. And I hope you enjoyed this non-traditional Tax Tip Tuesday I did today, talking about marriages and filing statuses. I hope you were able to gain some valuable information, take something with you, share this video with someone who may need this information. A lot of people, you may not know this, but a lot of people who are getting married or newly married, they do not know how they're going to file. They just think, I'm just going to file separately or file single and I'm good, and that is not the case. You really want to take into consideration what you're really going to do, because even on a separate, tax return filing separately, your spouse Social Security, follows you, and your Social Security number follows them. So you still are on the hook for, making sure your return is right, depending on, like I said, the itemizing versus standard deduction. And if you're in a community property state and have to allocate the income, so you want to make sure that that is something you're considering when you are, looking into your marriage or getting married or, the demise. So I hope y'all enjoyed today's Tax Tip Tuesday. Like I said, it was non-traditional today. And if y'all have any other topics you would like me to talk about, definitely leave a comment below. And I will see y'all in the next Tax Tip Tuesday.